Hey everyone, and welcome to another deep dive. So let's be honest. Have you heard the terms soft landing and hard landing thrown around lately and kind of felt like you were missing the secret decoder ring? Like everyone else is in on some inside joke about the economy?
Yeah.
Well, you're not alone, and today we're handing you that decoder ring.
Okay.
We're diving deep into what's really going on with these economic forecasts and
Yeah.
figuring out just how worried we should be.
Okay.
Joining us on this economic adventure is a true expert in deciphering market signals. Welcome.
It's great to be here. I always enjoy a good deep dive into the data.
And you've come to the right place. Our jumping off point today is an article by economist Juan Ignacio Marron,
Okay.
founder of Inversores Institucionales. He's got some really interesting points about where the economy might be heading, so let's decode this together. Now, when we talk about a hard landing versus a soft landing, we typically think about recession versus, well, not a recession. Seems simple, right?
That's the common understanding for sure. But according to economist Alan Blinder,
Okay.
it's not quite that straightforward.
Okay.
You see, the landing itself actually refers specifically to inflation and how successfully the central bank manages to bring it under control.
That's interesting. It's not just about whether the economy grows or shrinks, but
Okay.
what's happening with inflation within that.
Exactly.
So tell me more about Blinder's framework's frame. How does he define these different landing scenarios?
He lays it out like this. No landing means the central bank's efforts to curb inflation haven't worked. It's still running hot. A soft landing is the ideal scenario. They manage to cool inflation without causing massive job losses or sending the economy into a tailspin.
Okay.
And a hard landing, well, they might wrestle inflation down, but at the cost of jobs and a significant economic slowdown.
Okay, so it's like threading a needle, trying to find that sweet spot where inflation comes down without causing too much collateral damage. To make this more concrete, could you give us some historical examples of each scenario?
Absolutely. A classic example of a hard landing would be the early 1980s in the U.S. The Federal Reserve, under Chairman Paul Volcker, implemented aggressive interest rate hikes to combat soaring inflation. It worked, but it also triggered a recession.
A classic example of tough medicine, effective, but with some rough side effects. What about a soft landing, though? Those must be trickier to pull off.
They certainly are. One example that's often cited is the mid-1990s in the U.S. during Alan Greenspan's time as Fed chair.
Okay.
The economy cooled enough to prevent runaway inflation, but we didn't plummet into a full-blown recession.
Right.
However, even that period is debated among economists,
I bet.
which highlights just how tricky it is to get that soft landing just right.
It's a delicate dance, isn't it? So, with Blinder's framework in mind and those historical examples, where do we even begin to assess if a hard landing is really on the horizon right now?
Well, we can look to economics forecasts for some potential clues.
Okay.
They're not perfect, of course,
Sure.
but they can give us some hints about which way the wind is blowing.
And speaking of clues, Maron highlights some interesting projections from Trading Economics for the third quarter of 2025.
Okay.
These are based on analyst consensus and various economic models. So let's see what the data tell us. First up, economic growth.
Right, and this is where it gets a little concerning. The projection is for economic growth to slow down significantly from 3% now to only 1.5% by the third quarter of 2025.
Yeah.
That kind of slowdown doesn't exactly scream soft landing.
A drop that sharp definitely gets your attention. For our listeners, what would a slowdown like that actually mean? What are the real-world implications?
A slowdown of that magnitude can have a ripple effect throughout the entire economy. Businesses might hold back on investments, hiring could slow down, and it could even affect your own ability to get a raise or find a new job.
So we're not just talking about numbers on a spreadsheet. This is about real people and their livelihoods.
Exactly. And the potential turbulence doesn't end there. The projections also show unemployment ticking upwards from 4.1% to 4.4%. Again, it might not seem like a huge jump, but coupled with the economic slowdown, it paints a concerning picture.
2 points against a soft landing, already slowing growth, and a rise in unemployment. What about inflation itself, though? Isn't that the whole point of this balancing act?
That's the interesting thing. Inflation is actually projected to be relatively under control at around 2.3%, and interest rates are expected to drop. At first glance, this might seem like good news.
But there's always a but, isn't there?
You're right. There's always a but. The question we have to ask is, are we seeing the cost of controlling inflation show up in those other areas? The slowing growth, the potential job losses, like squeezing one end of a balloon, the air has to go somewhere.
A trade-off, then. We get inflation under control, but potentially at the cost of economic vibrancy.
It seems that way. And that's why simply looking at any one indicator in isolation can be misleading. It's the interplay of all these factors that gives us a clearer picture of which landing scenario is more likely.
Okay, so we've got these economic projections hinting at a slowdown, but what about the human element? How are consumers feeling and acting in the face of all this?
This is where it gets really fascinating. Consumer confidence is actually projected to increase going up to 77 points. People are feeling optimistic, at least for now. However, here's where the data throws us a bit of a curveball. Retail sales growth is projected to turn negative down to negative 0.2%.
That's it, Scratcher. People are feeling good, but they're not necessarily opening their wallets at the same pace. What's going on there?
It could be a sign that even though people feel optimistic in the short term, there's a sense of caution creeping in. They might be tightening their belts in anticipation of a bumpier road ahead.
So a bit of a disconnect between sentiment and actual spending habits. It almost sounds like we're on this economic tightrope trying to maintain our balance while all these forces are pulling us in different directions.
That's a great analogy. And that's precisely why it's so crucial to understand these nuances. Anyone claiming to have a crystal clear answer right now is likely oversimplifying a very complex situation.
Right. Anyone who says they have it all figured out probably doesn't. So with all that said, based on the data we've explored, those projections, the historical context, what's your take? Hard landing, soft landing, or are we still circling the airport?
Well, right now, I'd say the data point toward a strong possibility of a hard landing. Inflation seems to be on track, which is the goal, but the projected slowdown in economic growth, coupled with potential job losses, suggests a bumpier touchdown is more likely.
Okay, not exactly the news we were hoping for, but as you said, it's about understanding the complexities, being prepared, and adapting. Speaking of adapting, let's shift gears for a moment and talk about what this all means for investors.
Absolutely. This is where things get really interesting from an investment standpoint. Because even in a potential downturn, opportunities emerge.
Right. It's not just about battening down the hatches and waiting for the storm to pass. There are always moves to be made, strategies to adjust. So for our listeners who are thinking, okay, hard landing time to get strategic, what are some key things they should be considering?
Well, one strategy investors often employ during economic uncertainty is to look for defensive sectors. These are industries that tend to be more resilient to economic downturns, like consumer staples, healthcare, and utilities.
Those make sense. People still need their toothpaste and medications, even if times are tough.
Exactly. These are things people rely on regardless of the economic climate. Now, that doesn't mean these sectors are completely immune to a downturn, but they tend to be less volatile compared to, say, discretionary spending or tech stocks, which can take a bigger hit when the economy slows down.
So it's about finding those areas of relative stability, those things that people depend on no matter what's happening in the stock market.
Precisely. But here's where it gets even more interesting in this. Every economic cycle is different. What might have been considered a safe haven in the past might not perform as expected this time around. The specifics of this particular economic situation are unique, so due diligence and careful research are essential.
Right, we can't just dust off the old playbook and assume it'll work perfectly in this new environment. We have to stay agile, informed, and ready to adjust.
Exactly. And this is where truly understanding the fundamentals of the companies and sectors you're invested in becomes so important. It's not just about chasing headlines. It's about looking at the underlying strength and resilience of a business.
It's like navigating by the stars. You need to know the constellations, but you also have to adjust for the wind and the currents. You brought up something else I wanted to touch on. You mentioned that opportunities often arise during downturns. What are some examples of that?
Well, as we discussed, some businesses actually benefit from economic downturns. Think about discount retailers, for instance. As people become more price conscious, these businesses often see a surge in demand.
Right, like those dollar stores that seem to be popping up everywhere. A potential hard landing could actually be a boon for them.
Exactly. And then there are sectors like cybersecurity and renewable energy, which are driven by long-term trends and government policies. These are areas where we might see continued growth even if the broader economy slows down.
So it's about spotting those pockets of resilience and growth, those areas where the momentum is strong enough to defy or even benefit from a downturn. This is what makes economics so fascinating. It's not just about numbers. It's about understanding the forces that shape our world and adapting to them.
I couldn't agree more. And that adaptability, that willingness to learn and adjust, is what ultimately empowers us to navigate any economic climate, whether it's smooth sailing or a bit turbulent.
I love that perspective. It's not about fearing the unknown, but about embracing the opportunity to learn, adapt, and maybe even come out ahead.
Precisely. And that's what makes these deep dives so valuable. We're taking these complex economic concepts, these terms that get thrown around like everyone's in on the secret, and we're breaking them down in a way that empowers people to make informed decisions.
Absolutely. We've gone from, wait, what's a hard landing again, to feeling prepared to not just weather the storm, but maybe even find some opportunity in the midst of it.
Exactly. And if I can leave our listeners with one key takeaway, it's this. Don't just react to the news anticipated. We've looked at the data, we've explored the potential outcomes. Now use that knowledge to make proactive decisions, whether it's about your investments, your business, or even just your personal finances.
Knowledge is power, and forewarned is forearmed, as they say. This has been an incredible conversation. Thank you so much for guiding us through this economic maze.
It's been my pleasure. These deep dives are always a fascinating journey.
And to our listeners, we know you're out there soaking it all and getting ready to put these insights into action. So here's a final thought to ponder as you go about your day. If a hard landing does occur, what opportunities might it create? What industries, products, or services could actually thrive in that environment? Keep those brains buzzing, do your research, and who knows, you might just ride the next wave of innovation. Until next time, happy diving.